want to recheck.
exactly,
Yeah,
exactly.
yeah, I record it.
All right. So I won't be selecting any pair. I would want you to pick any pair we are going to look at, and then I'll explain the concept of how price or market moves on any pair.
Okay, let's check volatility 75 IS.
I knew you are going to call that pair. It's alright. So volatility 75.
IS, ne? IS.
Okay, IS. Okay.
Yeah.
Alright. So okay, okay, okay. So now with this section, we don't get to see the monthly time frame, weekly time frame, and so on. Um, but I'll do something so you can we can look at that also. Now the reason for that is so that you can see the general view of the market, ranging from the highest time frame down to the smallest time frame.
All
Now
right.
on this one, I don't use this
Incoming mail.
so I don't really use this 75 that much. But let's find let's pick volatility 75 here. Okay, so vo, okay, so volatility 75 1s. Enter. Then let's open it over here on chat window. So that's this here, and okay, remove the volume. Um, okay, properties. I want to change the color grid bar up to green, bull down green, bar down red, bear down red. Okay, so I think I have my chart ready now. Mm. Sometimes I still prefer to eliminate all these lines so that my chart is very clean. So I would simply click on grind. So basically, this is now the monthly time frame. So what I'm looking at, so first of all, what we are basically going to be looking out for on this monthly time frame is we want to understand what is happening. At the moment, we can see that the market is on a downtrend. Are you with me?
Yeah.
Yeah. So this is monthly time frame. So we won't want to do much. The only thing we basically do is if we look at this previous side here, you will see that there was okay, let me see. So if we should look at the previous side, we would see that there was a level, this level here.
Yeah.
Yeah, so this is on the monthly time frame. You won't really see it on that current daily time frame on the MT5 section. So this is, we can consider this a break of structure. So there's what we call break of structure. Break of structure is basically when price breaks a support. Now this is a break of structure on
Okay.
the higher time frame, which is the monthly time frame. So and it's a large one. Even this two is too. Let me make it a little bit slim. So this is a break of structure. Now, whenever we have a break of structure, the rule is you
Yeah.
expect price to retrace into your order block which created that break of structure, and this is our order block which created the break of structure. Now I'm trying to explain market structure on higher time frame.
Oh yeah.
Now what we would simply do is we'll come and mark out this zone. So I'll mark this
The
out.
order block. Yeah.
Yeah, so this is our order block. So when we mark it out, we understand that whenever price, we call market price, we call it price, We can call it market, we can call it price, which is the movement of candlesticks. So whenever price gets
Yeah.
into this other block, we are anticipating that we want the low which created the retracement to be taken out. So we are going to be, we'll mark this whole zone, these two green monthly candlesticks, as our opposing move, and we are looking at catching the drop to the downside. So
Yeah.
yeah, so we are looking at catching the drop to the downside. Now, that bearing that in mind, we can now come to the weekly time frame. Now, on the weekly time frame, we are looking at catching our opposing move. Now, our opposing move is this. Remember, we've marked out this other block, but in order for us not to get a little bit confused, I'll simply do what? I'll mark this at the top and I'll mark this at the bottom, helping us understand that this is the wave or range we are basically looking out for.
Yeah.
Uh-huh. So that is like me marking this my other block, understanding. So now, when we mark our opposing move comes from this area. So our opposing move comes from this point. Our opposing move is the push we had to the upside. So we also need to mark that. Now, in this push we have to the upside, what we look out for is this. We look out for each of the structure or each of the highs we can mark going to the upside. Now, for you to understand it, I will delete this. So we can see that from this place it created something like a double bottom and it broke this point. We can call it a break of
Yeah.
structure. It broke this point to the upside. Red candles to the downside, break of structure. Now what do? We mark out this high. So we mark this high out. This high is going to play a very vital role in our decision on the market. Now, this is a
Okay.
weekly time frame, but we have to still do that. So mark this high out. Now, I will explain why we mark this zone out. Now, after that, there are also smaller highs here. This one, because this is weekly time frame. So, but then we want to mark out the major ones which created. So, anytime you see a bearish candle and you see a break, we mark that high. A bearish candle, we see a break, we mark it out. So now we are going to be marking this high out again. So we mark this out. So I won't want to drag it too much. So we had a bearish candle, we have a break. Now we have a bearish candle also here, and we have a break around that zone. And that was the last one we had before price dropping to the downside basically. So we'll be marking this out. We're marking this level out. So basically, yeah, that's it. So we can go to the daily time frame.
Yeah.
So on the daily time frame, we are able to get it clearly or clearer. So on daily time
Yeah.
frame, we can now see that the zones are coming out clearly, which is this high.
Yeah.
So these are the major levels we marked out, and this one. But now, because I told you that there are highs also here, but we can't see those highs because they are on the higher time
Higher
frames,
time frame.
because those are the weeks, they become the weeks. But what do? Because we can now see those highs printed out here, you can see a bearish candle drop, a break of structure. We do what? We mark this place out. And now, if you can look clearly at this point, you will see carefully that this level is respecting our our other block, which is this red line. You can see it's respected the red line.
Yeah.
Price
Yeah.
got
Yeah.
to it, it dropped, got to it, dropped again. Now this level we would also mark it. Now what are we marking? My my coach basically would tell us that he calls these levels ceilings. So he calls all these levels in order for one to easily understand it. Using the ideology of
Ceiling.
trading, yeah, he calls it ceilings. You understand? He calls it
Ceiling.
ceiling. So
Basically
whenever you are trying to
ceilings.
mark the move to the upside into your other block, he calls them you marking out the ceilings. And the opposing
Yeah.
move is you marking out the floors, but we will get to that basically. So let's just look at this. So when we mark this out, Then we have another one again, which is this one here. So we mark this out again. So now, one thing I would want you to look at carefully is that whenever we you look at, so one thing I want you to look at carefully is this. I've not inputted my trend line, so we've not even talked about trend line. We're just looking at the market structure using the ceilings. Now, I would make it so you can see this is the other block we looked out for, which created a break of structure to this downside, and then this is our
yeah,
opposing move, which pushed to the upside, and we are banking on this opposing move to catch our sales to the downside. You understand? So we are banking on this opposing move to give us an idea, to give us like a motion that will help us catch the sell to the downside. So now, where
yeah,
are the points we are going to be looking out to catch sales? That is the question. Now, I want you to look at something carefully. I'll try to make my chart a little bit wider now. So, I want you to look at something carefully. Now, we marked this resistance point. Now,
all right,
after this resistance point got broken at this point, you see that it made a drop, it made a push to the
yes,
upside again, and it made a drop. Now, this point would have been a point where we would have taken an entry for a sell. But then let's take for instance this is the highest point and you are not too sure of taking entries at this highest point. Now mind you, this is daily time frame, but I'm just trying to paint a concept to you so you understand the concept. So now
yeah, yeah,
what we would do basically is this. This second level is another zone you'll be looking out for clearly. Now, if you look at this second level, what happened? Price broke out of it, came back to the downside, pushed up, came back. Now, at this point, one thing you will see here is what happened. Price did what? It formed.
it was,
Yeah. So let
it's a
me.
range.
I'm coming. So basically, at this point, okay, good. So basically, at this point, what you want to see in the market is you want to see price close below this zone, retrace, and close again below it. Then you can now look at catching a sell from here to this next zone. If you want to hold long term, you can look at catching a sell from this point down to this TP. But remember, this is a daily time frame. You can't hold trades that long. Not like you can't hold it, but one needs money quickly. You understand?
Yeah,
So basically, that is basically an entry from here. So you wait for price to get into the price, reject it, and close below the price, and then you can trigger your points from this area. Now, aside that, look at this level of resistance again. What can you see here? You can see that when price got here, it retraced to the upside. When price got here, it bounced. But now, after price broke this point to the downside, you can see it came here later on to retest. It came here to retest it, close again with a bearish candle, and you can see the sell. It came here to retest, closed again with a bearish candlestick. You can see the sell. So basically, at this area, you can see that price retested it twice or multiple times. One, two, three, four around this zone. I don't know if you understand. Now,
yeah, yeah.
yeah,
Understand what you did.
before retesting this point, you can see it broke to the downside. If you wanted to catch these sales to this zone, for instance, would have been you catching it. Look at this one. It dropped inside. It came here, retested it, and it closed. When it closed with a bearish candlestick, you would have caught the sell to this downside if you wanted to catch this move. Now,
Yeah,
looking at this one again, what happened? It closed. It got inside here, closed here, retested, dropped again, straight to this TP. That was
yes,
one zone. So now what I want you to the major reason I'm pointing out this to you is I want you to understand that whenever all these levels we mark, whenever price gets into it, it always forms a rejection, closes back at our level, and then drops to the next zone. So if you look at it, it forms here, it's rejected and dropped. But now this one did not drop to the downside. Why did it not drop to the downside? You will see it clearly. It tapped this level here. This was a major point. This resistance. So this
yeah,
resistance
yeah,
was the cause of this market rejecting to the upside.
To the upside.
Yeah, so this resistance was the cause of market rejecting to the upside, and then you can see a little push to the downside, a continuation. If you wanted to mark it, you will see that during the day, you will see that this area basically was something that helped market to make it push up, but we don't want to look at that at the moment. So now, what can we see again that happened? From this point, it dropped. You can see
Yes.
it pushed up, it dropped. Now, this is basically just the higher time frame move. So after catching this, you are using this to understand the zones price is moving from. It's not like you are using it to
Yeah.
take your entry. You are using it to understand the zones price is moving from. And with this, you understand when you are able to mark this out properly. You understand that whenever price gets into a zone you've marked, it will do what? Most times reject and close below. Then you can target the next level. When it drops again, you do what? You are waiting for it to reject to your zone and you can target a sell, reject again, target a sell. You understand? Now price got into this
Yeah.
zone. On smaller time frame is where we can look at price rejecting. Of course, it would have rejected on the smaller time frame here before dropping.
Yeah.
So let's look at a smaller time frame. Let's see what it did. Okay, can you see it? It closed
Yeah.
here, dropped, rejected, and closed again, and that was the reason it gave a massive drop. Now, at the moment, is it something one would look at taking an entry on? No. Why? Because at the moment, is this a market we would look at selling? At the moment, I would say no. Why would I say no? I would say no because market is currently playing around TP.
Yeah. Yeah. Yeah.
So okay, good. There's an entry though. It's currently playing around TP. Now, entering from here, you'll be looking at taking profit at this point here, at this red line, which price hasn't gotten to yet. So if we go to the 5 minutes time frame, you want to pick something, you would want to look at a price reaction from this point. So but then let's go back to our chart so you can see we can do a proper markup now. But with the fact we've looked at the weekly time frame, you can see on the
Yeah.
weekly time frame it's selling. We've marked out our zone. We've looked out on the monthly time frame, we've marked out our zone. So we can now go to the chart. So on the chart now, you will be able to understand what we are doing currently because we've marked out our levels on the weekly time frame properly. Now on this chart, we
Yeah.
can clearly understand now that this zone, this zone is same as this zone here, this other block. Is same as this other block on 24 hours.
Yeah.
Yeah, so let's go. So once we're able to pick out that other block, we have no issues anymore because yes, they didn't provide us with other information, which is you see they try to not provide us with a lot of information on the MT5, and that's something that while using this you have to be very conscious because you need to be able to see the weekly time frame and the monthly time frame to be able to understand the bias, the general bias of the market or general bias of price.
Yes.
You understand? So basically, um, okay, we can pick out this price point. So basically, you can see now that this is the TP level. What are we expecting? Generally, we are expecting that price gets to this point, makes maybe a little retracement and continue to the downside because overall it's a long-term sell. You get. But at the moment here, one may want to today just catch a little sell to the TP, but that is different. So now, what we marked out, the levels we marked out was this level. We marked out this level. I want to make this a little bit thick. So we marked out this level. I'll make the color golden. So we marked out this level, and we marked out this level. So we marked out this level also. We marked out this one. We marked out this high. We marked out this high. We marked out this also. Now, look at something that happened here. Now, this is you see, when it comes to the market just it presents to you what it's planning to do. But the fact is, if you are able to make use of that information properly, you make money, you make profit. If you aren't able to make use of that information properly, then you do what? You lose money. Now, look at this area here carefully. You will see that when we mark out this resistance, you see that market did not close above this point in alignment with the other block. Can you see it here?
Yeah, yeah.
So the body of the candlesticks didn't close above this point. That is simply what will tell a lot of persons that price is getting weak at this level and we are looking out for possible
To
drops.
sell.
You understand? Now, clearly,
Yeah.
there's one other thing I didn't add on the other side, which where we were looking at the higher time frame, is I didn't add the trend line. You understand? I didn't add the trend line. Now, I a lot of the times plot my trend line. Now, the trend line helps us a lot to be able to. Now, I just wanted you to understand the concept of the resistance, which are the high these zones. Let me get this out first. So I wanted you to understand the concept of we marking out this opposing move. So we understand this is a downtrend, and then what we pick is we pick out the opposing move, which is this move from this point to this point. So we mark out the opposing move, and we are able to look out for the highs, which is this 1, 2, 3, 4, 5, 6. You get. So I don't know. Do you have other traders
Yeah.
you collaborate with in South Africa over there?
No, no, I've been doing it all alone since I don't have any.
It's all right.
By the
It's all
way,
right.
no, I'm from Zim, but I reside and work in South Africa.
Okay.
I usually go back home for holidays and stuff. Yeah, so
Okay.
there's no one I know here in South Africa.
It's all right. It's all
Only my
right.
home boys. My home boys, they don't understand this thing of forex trading. They feel like something is complicated for them, so they
Yes, it's
can't
something
try it.
complicated though, but it's something that when you open your mind to accept it, you can be able to implement it properly. But if you don't open your mind to accept it, nothing you can do about it. It will remain complicated. Because even when
Yeah,
you open your mind to understand it, it's going to take you a while to clearly put things right. You understand?
yeah,
So now,
yeah,
yeah. So basically, we've marked out the highs. The next thing we're going to be looking out for after marking out the highs is I always tell every person you have to understand the concept of plotting your trend line or drawing your trend line. So the trend line basically
yeah,
it's from this point to this point basically. So this is the first trend line. Now this first trend line you are basically looking at marking out the lows. So you are picking it from the lowest point to the higher low, the concept of market structure from the lowest point, which is the lowest low, to the higher low, the one which is higher than this one, and then you align your trend line. So
yeah,
when you plot it through, it will just go straight. You understand? I use a tool though to
yeah,
extend it. So this is another trend line. This is one which maybe one would know, but I don't use. I don't like using this one. So we'll plot this out. Now this is our trend line. We are basically marking it from the week, the tip to the week here. So that is it. You understand? Now we do an
yeah,
extended one, which is we connect also a trend line from this point to this next point. You understand? But now before we
yeah,
do that, I would want us to go to the 4 hours time frame. So on the 4 hours time frame, uh, it becomes a little bit clear. You understand?
yeah,
Now what do we do? I simply mark out from this point and I stretch it out. Now this guy here, I would make it a little bit light. I'll make it a little bit light. Yeah, so I'll make it a little bit light so that it's clear. And we have this area. So I've plotted out this zone here. We have this with this resistance and this. So that's it. So now what are we looking out for plotting our trend line? You are basically trying to get your confirmation of the trend line before you can initiate entries. You understand? So you are basically trying to
Yeah.
get your confirmations from the trend line before you can initiate entries. So now here is a trend line that gave us a break to the downside, which is one. Now this next trend line helps you to be able to understand what is going on at the top here. So let's get to work. Okay, so basically now don't get confused with the plenty markup. Now you can see the markups are beginning to be much.
Yeah. Don't worry, it's okay. I'm
So
still
it's
still
beginning to be
together.
much, but one thing you understand from it is we basically marked out all our highs. So all these lines are basically our highs, and then for this one, I would now remove it. We already understand what why we marked that out. So now here you clearly saw how we were able to mark this out, and we saw on the higher time frame that market didn't really close above here. It was giving rejections. Now this is our
Yeah.
trend line. If one wanted to catch a trade from this top side, how would one have been able to do that? Now I want to show you what you would have been able to do catching trades from this high for a sell. So what you would have done is we would simply come here and we will want to mark the opposing move to the upside in order to catch this drop. Are you with me?
Yeah.
So we'll be looking at the opposing move to catch the drop. Now, I will pick a different color. Now, the reason I'm picking a different color is so that you can understand the lines we are picking. So, let me see. It seems it's a little bit thick. Let me see. I want it. Okay, good. So, let me start from the bottom. So, we have price here pushing to the upside. This is our opposing move. We mark this out. So this is a break of structure. The first break of structure we have in this whole opposing move. This is our opposing move. So so this is the first break of structure we have. This is the next one we have, and this is also another one. So basically, all these are the opposing moves we have, and then we have a last one, which is you can see price broke to the upside before dropping again to the downside. So this is the last opposing move we have. So clearly we can see we've marked out all the opposing moves. Now with this low is going to be our take profit with this opposing move. Why? Because this is where we started our opposing move from. Are you with me? Now
Yeah.
this is basically you now analyzing for the day. We are now analyzing for entries within the day. We are not analyzing for entries um large term entries. Now you can see we have moved right from the higher time frame, which is the monthly time frame, to the weekly time frame, to the daily time frame, and currently we are in the 4 hours time frame. We would also move down to the 1 hour time frame shortly. So we are picking the opposing move. I simply said okay, I'll use this too basically. So this is where we are going to be looking at our take profit. This is where we are going to be looking at taking profits, um which means when we are taking entries from here, this is where we are looking at closing our trades. You understand? So once price hits this zone,
Yes.
we take profits. We are done for that moment. We allow price to reposition and give us a next entry. Now, how do we make an entry on this now? How we are able to make an entry on this is this. We we clearly wait for price to break into this zone. So when price from this high, it's respecting this high and then it clearly breaks into the zone. So that is our first confirmation.
Yes.
Then when it breaks into the zone, we want to see markets react from this level, which is this ceiling, or this one. So now clearly we can see that price is reacting from this ceiling, not even this one, this ceiling. So and this one. So you
Yeah.
can see that when it reacts from this ceiling, it does what? It pushes back to this price here, which is this ceiling, and then it
yeah,
respects it. So now it closes from this point, and we are looking at taking ourselves from this point, and we'll put stop loss where at this high. Are you getting it now?
yeah,
So
yes, yes,
yeah, so if I can go, I know when it comes to looking at price from all these views, it's most times okay. Let me switch to 1 hour time frame if it will allow us see those markups there. So let's see. You know these guys, they okay, they allowed us. So basically on this one, you will clearly see what a close of bearish candlestick at this price. So this is where we will be marking our entry. So look at our entry. I want you to really understand something here. So in this market here,
yeah,
we look out for something which is price drops to the downside. It respects our ceiling and retraces to the upside. When do we enter? We enter when it retraces and it's still giving a bullish candlestick here. We want to enter when the candlestick closes at that price with a bearish candle. You understand? So this is the
yeah,
bearish candle
yeah,
that closes, and then we can put our price entry, our execution at that price point. So this is the body of the candlestick close, and we can initiate our entry there, and we put stop loss where exactly at the high. Now this is where you can now do your calculation. Just as I explained, you can decide to say, okay, I want to risk $10 on this trade, I want to risk $5 on this trade. You can now do your calculation. You understand? So
all right,
yeah,
yes,
and then this is our take profits. Now for me, since you already understand what you are looking at, so you are just taking profit at this point. So you will be in the market when markets will do all of this move. Do you get me now?
yeah,
All you have to do is to take your entry and allow it play out. Now at this point again, if let's say you missed this entry, so I'll be deleting this, so we don't want to stress ourselves. So you already understand the concept. We'll be deleting this. So now if let's say, take for instance, you miss out on this entry, this is another entry. Price did what? It dropped to the down to the zone and made a retracement again, and did what? It closed with a bearish candlestick here. The moment you get your candlestick closed with a bearish candlestick on 1 hour time frame, you are doing what? You are executing. You are entering a sell. The moment you enter a sell, you
yeah,
won't put your stop loss here. You will put your stop loss at this high because you want to hide your stop loss so that the market will not go and hunt it. If you put it here, at times it can be hunted, which means they can go stop you out and price will continue dropping. So you
indeed,
don't want to do that.
yeah,
You understand? So that is it. I won't want to go into explaining the concept around taking entries from this price point, but then let me just show you something which happened here. Um, you can see there's a ceiling here, right? A little break of structure here, right?
yes,
Can you see it?
yeah, I can see,
Yeah, so look at something. Can you see what happened here also? You can see that when we draw this line here from this point, it aligns with this zone, it aligns with a break, and then it aligns with price coming into this level of resistance here. Price retraced, close with a bearish candlestick, and you can take your entry here and put your stop loss at this, hiding it at this high. So anytime you're taking your trade, you're hiding it at the next high, you're hiding it at the next high. So now we took our trade from this price point, we are hiding our stop loss here, and we are targeting TP here. So the same thing, just as I explained, if you're taking your trade at this point, what are you doing? You are hiding your stop loss here, and you are putting your take profits at this point. Now, I like to take profits. Anytime I'm setting take profit, I always like to take profit at the body. My coach who taught me would say we should take profit at the week. He takes profit at the week, but he tells us to take profit at this point because this is the most price point that price will hit and won't reverse. But whenever it goes to hit this point, before it gets to this week, most of the times it would make reversals. So now, I believe I've been able to try to break down the concept of how I look at price for you. And then this is a 1 hour time frame. Let's say for instance, TP got hit here. That price move has happened. You won't be doing any other thing again. You're only going to be waiting for the next time price is going to present itself to you. And at this point, there was also something. But then one thing you will see clearly is price didn't get into this major level. But if you wanted to go a little bit further and mark out this resistance, you see that price reacted from here, this resistance here, this
Yeah.
ceiling. You understand? So price reacted from this ceiling. What do you
Yes.
do? You would simply you would simply do what? You would simply wait for a close here, a close of bearish candle at this point, and then do what? You take your entry, you target this next level, you understand, and you put your stop loss. You can hide your stop loss either at this point, or you can hide it at this candle here, depending on which you want. So but then there's an entry there, a clear entry, using this opposing move, which is the ceiling. Now let's go further. This one, using this same opposing move, which is this point here, if you extend it through, let's see. So if we extend it through, actually this price didn't get into it. You understand? This price didn't get into it. So we wouldn't have been able to take our entry off of this place. We wouldn't have been able to take our entry. The only thing we would have been able to do is we can be able to mark this whole move to the upside as our opposing move, and then we would now mark all of these levels. So if you look at this level here, so I'm trying to basically break it down. So we would,
Yeah.
yeah, so we would now mark this level as our opposing move.
Yes.
So you can see how price reacted using this level as our opposing move. There's also another level here. So you see there's also another level here, which is price dropping into this place. You can mark here also out. Now, one thing you would, the reason price would react with your zones a lot is it needs to get into, it needs to, the reason price would, one thing that would guarantee you more entries or better entries is you need to see price from any of these higher zones you mark. You need to see price come down, reject, which is push up from the next level with any levels below it touches, push up. Then when it closes below with a bearish candle, that is your entry. You can hide your stop loss above. So with it closing here, we can hide our stop loss here. You understand? Or you can decide to hide it here depending on how you want it, and then you get your entry. So let's see. Same thing here. You can see this one respected the main zone. It respected the main zone, so you just simply wait for a close of bearish candlestick. You take your sell, you put your stop loss, hiding it here. Very simple. You can see price didn't hit that point. If it hits it, fine. If it closes again below, you can take your next entry and hide it again there. You understand? And then your TP, you are looking at
Yes.
take profit the next structural zone. This one, if one took an entry here, you're looking at TP, the next structural zone. So that's it. That's it, bro. That's it. I think I'll call this a wrap. I'll call this a wrap. I hope you're
All
able to
right. All right.
understand
All right.
one or two, 18 or two from it.
Yeah. I took it with it's support and resistance concept,
Yes, that's it. You can really call it a support and
and
resistance
also
concept, but it goes a little bit beyond just support and resistance.
yeah, because I feel like we have to be patient and watch close price. You are
Exactly, that's
following
the
price. You
point.
are not.
That's the point exactly. You have to be patient and watch the market play out.
Yeah.
Yeah,
And check for rejections if ever the candle closes inside the at the
at the zones, you
resistance
can,
and then it's
yeah, you can
presenting
now initiate
to
entries.
you a bearish candle, which means you are looking for a retest for you to sell the market.
Exactly. And one thing I didn't really explain the bias for a buy. I just focused on sales. Now the reason for that is most times price tends to drop faster, you understand, than buy faster. So whenever it's
Yeah,
buying, it's most times slower when buying, and whenever it's selling, it drops faster. So with
drops
this
faster.
strategy,
Yeah,
it
that's
is
true.
best to focus on one bias. It's best to focus on one
Yeah,
bias. If you're selling, you're selling. If you're buying, you're buying. But sometimes you just have to catch the buy if you catch it, if you see it properly. So that's it. So that will be all for now. I will keep you updated, and also do keep me updated when you're ready. You understand? We see how we can go
Yeah.
about things.
All right, my man. Thanks so much for your time. Eh?
You're welcome, bro.
Okay, thank you. But let me go in.
Okay, so I have to close end the meeting.